Time for Wave 3 Listens Live on Kentuckiana's first live local TV talk show. All hosted by John Ramsey. This is Wave 3 Listens Live.
And welcome to Wave 3 Listens Live. I hope you had a fantastic weekend and took advantage of the great weather. We've got a great show lined up for you here. We're going to talk about your roadmap to retirement with Brookstone Financial. The managing partner is here. That is Seth Stewart. And Seth, before we get into exactly what we're going to be focusing on this show, all right, weekend. Did you do any garden work? Did you play a little baseball?
I did, yeah. We did all the above, actually, John. We had a baseball game out at Jeff GRC. Great time out there. We actually got beat, but hey, that's going to happen from time to time. And then I had the opportunity to get out there, start tilling the garden. But I think it's still a little bit too early. You know, I think I'll hold off till Derby.
So are the colleges approaching your son yet? I know he's young, but
not yet. That's kind of part of my retirement, right? In the
there
back
you go.
Of my mind, yeah.
I like that. Wouldn't that be a nice little bonus? All right, before we get into your roadmap to retirement, let's real quickly take a look at the interest rate update. We do that weekly here with Seth Stewart, and here we go, Seth.
Yeah, John, rates are always looking up at Brookstone. I mean, money markets are what they are. These are FDIC insured money markets. Still low. Rates are likely to rise in the future, but 0.80% on FDIC insured money markets. 3- and 5-year fixed annuities still hovering around the 2 to 3.25 mark. The short-term maturity bonds still looking good. Interest rates again on those bonds are likely to rise in the future, but we're sticking very short-term when it comes to investments. This day and age, I think you'd probably be making a mistake to tie your money up for a very long period of time, or a large part of your money. You don't want to tie too much money up.
Yep, and that's because interest rates, they're bound to go up at one point or another, right?
They're bound to go up, and you want to be in a good position to participate in rising interest rates when they do start to increase.
All right. Yep. All right, now let's take a look at events. Upcoming events with Brookstone Financial, a chance to get to know the folks there, and it's very relaxed. Tell us all about this one.
Yeah, John, this is pretty unique because this workshop event is designed for savers. It's called Safe Money Strategies for Savers. It's at the Courtyard Marriott just off Blairwood Road off Hurstbourne Lane, Louisville, Kentucky. May 7th from 6 to 8 p.m. We're not going to be talking about stock market investments. We're going to be specifically talking about alternatives to bank CDs and money markets. The bank CDs and money market interest rates right now are extremely low, and savers are really looking for alternatives. Where can I park my safe money?
So you mentioned CDs, you mentioned money markets. So why are those two so popular with people who like to save their money?
Yeah. CDs and money markets are very popular again with savers. I mean, number one, they have safety of principle. So, you want to keep that money safe, but you also want to keep it accessible when it comes to your safe money. FDIC insurance, that's another aspect of CDs and money markets. But the thing is, and here's kind of what I jokingly call CDs. CD stands for Certificate of Disappointment. And I often tell my clients, look, if you want to go broke slow, go out and put a lot of money in CDs this day and age, because CD rates are really not keeping up with inflation rates. And you really have to look at your money for what it really is. And what your money is buying power. How much in goods and services can you purchase with that almighty dollar? And that's slowly going to be eroded at the low interest rates currently with bank CDs and money markets, John.
Well, let's get into specifics then. Yeah. So with CDs, with savings accounts, what can one expect to earn?
Yeah, John, if we could flip over to the graphic for the viewers at home, we can talk a little bit more about that. Again, this is what individuals like about CDs and savings. Number one, they have safety of principle. They know their money's protected. Number two, they have access to their money. And I mentioned earlier, you got to be cautious or conscious about tying money up for long periods of time today. And the interest rates. And the interest rates, herein lies the problem with CDs and savings this day and age. And right now, John, according to bankrate.com, the national average on a 1-year CD is 0.65%. The average 30-year inflation rate right now is hovering around 3%. So if you do a little quick math there, you can see that the actual real rate of return is about a negative 2.35. So this is why I make the comment and state that you're really kind of going broke slow if you put too much money in CDs and money markets, because you're not keeping pace with inflation, and it's just simple math. I mean, it looks good on paper. It looks like you're not losing money, but what's happening with the cost of groceries and gas and clothing?
Up.
It's all all increasing. So
interesting there. So that's why certificates of disappointment.
Certificates of disappointment. You know, again, if you want to go broke slow, put a lot of money in CDs.
I like that. It helps remember not to go there. Okay, so what are the alternatives at Brookstone Financial? What are some of maybe the suggestions or ways you're saying, hey, you've got an alternative here, let's go this way?
Yeah, there are a lot of alternatives to consider, but again, I think we have to put it in context of what we're comparing it to, you know, bank CDs and money markets. And in the bank CD and the money market world, you have guarantees and you also have access to your money. And again, we have a graphic that I'd like to show the viewers to talk a little bit more about some of the options that we're using at Brookstone Financial as alternatives to bank CDs or even money markets. And these are safe money accounts for savers. You know, again, these types of accounts offered at Brookstone first and foremost have principal guarantees. You cannot lose money in this type of account. Number two, you have access to your money, which is exactly what you're looking for in bank CDs and money markets. You also have interest rates that can actually keep pace with inflation, and that's extremely important. You have to protect your purchasing power. Now, the added two benefits there at the end, benefit number 4 and benefit number 5, are additional benefits that you don't find associated with CDs and money markets. And this is really good for lazy money. And I call lazy money is the money in CDs and money markets today. But additional benefits are leverage for long-term care expenses and a tax-free benefit to the beneficiaries. John, let me put some numbers on this and maybe it'll make a little bit more sense, okay?
All right.
All right, so I've got this unique account. It's one account with 3 very unique benefits. Let's say I have $50,000 of lazy money sitting in a CD or a money market. So I drop that $50K in here. Number 1, it's 100% liquid. Okay, so at any point in time, if I want to go in there and get that money, I have access to it. I don't lose control. It's also safety of principal. But from day one, just by simply parking that money there, my leverage on a long-term care benefit is about $200K. It's a 4 times leverage on the deposit. So if I get to a stage of life where I can't perform 2 out of 6 activities of daily living, not only can I access the $50K, but they're going to kick in another $150,000 to boot, okay, to go towards paying long-term care expenses. Let's say I open this type of an account and I die a week later, right? God forbid something happens to me, I get hit by the bus on the way home. My beneficiaries get $100,000 tax-free. It's about a 2-for-1 leverage, 2 to 1 on the death benefit. Wow. So, you know, again, here's lazy money sitting in bank CDs, money markets. You're earning very little interest. You're going to pick up better interest rates, safety of principal, but you're also going to pick up 2 more benefits that the banks are not giving you just right out of the gate. And your money is just as safe as where it is today. I
like the leverage for long-term care. Maybe it's because I'm getting older here, but that's important. And a bank CD doesn't offer that.
A bank CD does not offer that. And also the interest on bank CDs is taxable. And I mean, look at healthcare costs. The inflation rate on healthcare costs, the inflation rate on long-term care expenses are skyrocketing. So this is a great way of leveraging your hard-earned money. I mean, you worked hard for this money that's sitting in bank CDs and savings. Now it's time to put your money to work for you, just as hard as you worked for it.
All right, we'll talk more about that. Don't forget, you can always go to their website, brookstonefinancial.com. Great information. We'll talk about some of the free downloads that you can achieve as well. Coming up next on Wave 3 Listens. Welcome to Monday. Welcome back, Brookstone Financial. Another event. Now, these are very popular. Make your reservation early. And if you would, Seth, what will exactly be covered here?
Yeah, John, we're going to be talking about alternatives to bank CDs and money markets. This is safe money strategies for savers. April is one of the busiest months in the banking channel with maturities on bank CDs. This event's going to be at the Courtyard Marriott just off Hurstbourne Lane on Blairwood Road, May 7th from 6 to 8 p.m. Seating is limited, so call to RSVP now if you're interested. You're a saver. You want to keep your money safe, but you also want to keep it liquid.
All right, like the sound of that. Also, want to encourage you to go go to BrookstoneFinancial.com. If you go to BrookstoneFinancial.com, a lot of free information for you. Get more familiar with exactly what they do and what makes them different in your roadmap to retirement.
Yeah, John, and this is actually a link to RSVP for that workshop we just mentioned, Safe Money Strategies for Savers. But if you scroll down, you'll see some of the other services offered at Brookstone Financial. There's a lot of great reports that you can download. So we offer a lot at Brookstone. You know, it's not just investments. A lot of what we do, we really take a step back, focus on holistic financial and retirement planning. Again, John, we're not product salespeople. We're problem solvers, and retirees have a lot of problems to face in the future. But a lot of great information on the website. Things like IRA, legacy planning, annuities, Social Security, Medicare supplements, alternative strategies, so on and so forth.
You said something in the first segment there that caught my ear. Seth, you were talking about lazy money. Now, when it comes to my retirement, I hope I can afford to be lazy, but lazy money is not a good thing. Lazy money's sitting there, not earning much, and you're saying, let's put it to work, right?
Yeah, let's put it to work. I mean, think about it, John. Think about how hard you work for your money, you know, throughout your career, and now your money's sitting at a bank, in a bank money market or a CD, earning 0.25% interest or maybe 1% interest on a good day, to where the 30-year average of inflation is 3%. You have to start looking at your money again for what it really is, and it's purchasing power. How much in goods and services can you purchase with that almighty dollar? And it's slowly being eroded by sitting there in the money market and bank CDs. And everyone wants to have access to their money, and that's what they like about the local banks. They have a checkbook, maybe they have a debit card. Well, at Brookstone Financial, many of the custodians we use with our IRA money, okay, have checkbook access. So even though it may be IRA money, part of your retirement account, again, if you have to get to it, now keep in mind that if you wrote a check on your IRA, it's taxable. But if you had to get to it, it's fully accessible through checkbook access. It's a great way to replenish your local account at the bank, John.
I like the sound of that. Now, if you like what you hear about Brookstone Financial, not only do we encourage you to attend the event we discussed earlier, but also you might be interested in customer rewards as well. Now, exactly how does this work, Seth?
Yeah, John, this is a great little incentive we recently started offering to our clients and people in the community. And maybe you're watching the show today, and you say, hey, I probably really couldn't benefit from this workshop, but hey, my neighbor, he's talking about retiring. I know he's got a lot of money in bank CDs and money markets. Just for simply referring that individual or that colleague or coworker to Brookstone Financial, we have a $50 prepaid Visa MasterCard. You can spend it wherever you want, but it's just a way to say thanks. I mean, John, there's a lot of big brokerage firms and investment advisory firms out there spend hundreds of thousands of dollars on radio and billboards and so on. We put a lot of money back into our clients. We like to do fun things at Brookstone. We've talked about some of the zoo events and the river cruise we always do out of on the CQ Princess every year.
You got a golf outing coming up?
Golf outing coming up. We like to do fun things, and that's really how we grow our business.
I love to hear that. Now, you also said something about this holistic approach. We talked a little bit about, hey, for folks my age, you might be thinking about, long-term care. Hopefully you don't need it, but if you do, you've got to be ready. Talked about how much money you might want to leave your kids. When you talk about holistic, what does that all include? I know that's a big, broad question, but
it is. I mean, but here's the thing, and we always use the analogy of a three-legged stool. And if you think of a three-legged stool, the three legs are the legal, the tax, and the financial. That's holistic financial planning. We're coming up on tax time, right? We're 2 days to the deadline, April 15th. And actually, by the way, a side note, you have 2 more days left to make those 2014 tax-deductible IRA contributions. And if you haven't done so yet, give us a call at Brookstone Financial. Our operators are standing by. This is a great way to lower your tax burden for 2014. But back to that three-legged stool. It's the legal, the tax, and the financial aspects of planning. That's a true holistic retirement plan. So if your CPA or your tax advisor is not communicating with your financial advisor or your broker, or your estate attorney's not communicating with your financial advisor or your CPA, things are probably going to get overlooked, and the only person to suffer there is not only you, but potentially your beneficiaries as well.
That makes perfect sense.
Yep.
You mentioned, we all know that this is tax season here, but you also mentioned something about April as far as CDs maturing at this time. Why is that?
Yeah, John, that's a good question. April has more CD maturities than any other month of the year. So I know there's a lot of people sitting at home right now that are nearing these CD maturity dates, and they're facing these very low renewal rates at the bank. Maybe you had a 5-year CD that was locked in at 3.25% or 4%, but now your renewals are down to 0.25 or 0.75%. Give us a call at Brookstone Financial. Our rates are great, and we have some great CD and money market alternatives that there again still give you access to your money, but the safety of principal that you're looking for with your hard-earned cash.
Seth, with your team of professionals at Brookstone Financial, how much does the client's personality weigh in? Like you mentioned, this show is really kind of focused about people who are savers. Let's say someone who says, well, I'd like to test the market a little bit. I'd like to earn a little bit more, and I'm willing to risk a little bit more. Does that go into account with your professionals?
Absolutely, John. And we really start with what we call Rule 100. And if you, let's say I'm sitting down with someone that's 60 years of age. I'll take 100 minus 60. So the 60, their age would be the amount that we may suggest that they have in safe money, and the 40% would be the amount of money. If they do want to take a little bit of risk, do it with the 40%. Now, here's the thing. Once you secure your baseline of income, your safe money, where it's guaranteed, safety of principal, then it's okay to take a little bit more risk with what's left. But don't risk too much of your nest egg, because if we get into another market downturn like we saw in 2008, early 2009, it could be devastating and could potentially mean that you have to work another 2, 3 to 5 years before you can retire. And John, I saw that happen. And you talk about unfortunate. I saw people that retired right before the downturn of 2008 and literally had to go back to work and are still working today because they had too much of their hard-earned money in the market.
I know you've mentioned before, you admitted you're a self-professed numbers cruncher.
Numbers guy. Yeah,
you're a numbers guy, which is good. I think in your business is very important. So what are some of the economic indicators that you look at Brookstone Financial? I mean, I know you crunch a lot of numbers. You see a lot of trends and, stocks up, down. What do you really focus on?
Well, again, you've heard, if you watch the show, you've heard me talk about healthcare. I love demographics. Demographics are destiny. It's a fact of life that 10,000 baby boomers are turning 65 each and every day. I love the healthcare sector of the market. I also love energy. Crude oil prices have been hammered over the last 6 to 9 months. But, the unknowns of retirement that you really have to keep an eye on are future inflation rates and tax rates, because taxes have nowhere to go but up. Interest rates have nowhere to go but up. And when you look at your money, say you come to me today and you say, okay, Seth, to sustain my current quality of life, I need $50,000 a year. That's great this year, but what do you need 10 years from now, 15 or 20 years from now to buy the same goods and services that you're buying today with $50,000? And that's where holistic financial planning comes into play. We'll help you account for inflation. We'll help you account for not only current tax rates, but the potential that tax rates are likely to increase in the future. And those are the unknowns. Those are the landmines.
We probably have quite a few viewers who are watching right now, and they're saying, I have some of these CDs, and yes, they are maturing here in the month of April. So what's the first step? Do they call you, and you have recommendations, or exactly how does that work?
Yeah, so if the maturity date is prior to our upcoming event, I would suggest give us a call, come in for that 1 hour complimentary one-on-one consultation. They'll be meeting directly with myself. If the CD maturity date is near or slightly after the event, I would encourage them to attend the event that we have coming up out there on Hurstbourne Lane, because we're going to be talking about a lot of alternative strategies for CD money and money markets to put that money to work for you.
All righty, and coming up, we will give you that event date again. We'll put it up on the screen. I encourage you, give them a call. If you have an urgent matter, if you're at or near retirement age, then once again, it's Brookstone Financial. We'll keep the number and the website up on the screen. We'll be right back on Wave 3 Listens. Welcome back, and once again, Seth Stewart, Brookstone Financial. They bear gifts if you can answer the following trivia question.
Yeah, John, I kind of gave this away earlier, so we're going to find out who was watching. Which month averages more CD maturities than any other? A, March, B, April, C, May, or D, June? And that's sponsored by Sparrow's Tree in New Albany, Indiana. $25 gift certificate. A lot of great holistic, natural baby goods and baby gifts. It's a baby boutique, so if you're a parent, grandparent, check out Sparrow's Tree.
All right, first one with the correct answer at 888-800-9283. And again, I promised you we'd throw this up here. This is the upcoming event. You get to know folks who work, the team of professionals that work at Brookstone Financial, and also some great information.
Yeah, John, today's show is dedicated to all the savers out there, the people that don't want the risk in the stock market. This event is specifically for you. It's Safe Money Strategies for Savers. It's at the Courtyard Marriott, May 7th from 6 to 8 p.m. That's just off Hurstbourne Lane. If you'd like like to RSVP, there's the number at the bottom of the screen. Seating is limited. I think that room will only hold 20, 25 people, so go ahead and RSVP, get your seat.
You know, I think there's a lot of folks out there that are at or near retirement age that do have a lot of questions. Now, this one is for savers, but if they have questions, you mentioned, you know, consultation is free. So because I think there's so many things to talk about. I mean, we talked about before, we've had different focuses on the show. Today's more CDs and how to get your money to work for you, but there's other things to discuss, and you guys are willing to help.
Yeah, and again, John, if you secure that baseline of income with safe money alternatives, you secure that baseline of income, the things like the mortgage, the health insurance, the food, the utilities, the fuel. Once you secure those baseline expenses, it's okay to be a little more aggressive with the rest of your portfolio. But at Brookstone, again, we focus on holistic financial planning. So first and foremost, we want to take a step back, help you take all those accounts, all those statements, consolidate them into one holistic plan, and help you determine, okay, if you're going to take risk, how much risk is okay for you? Because there's many individuals out there right now that probably have too much risk, and another downturn like 08 could keep them in the workplace for another 3 to 5 years, and maybe you're considering retiring next month. You know, don't put yourself out there for too much risk.
There we go. And, you know, there's other companies who are, you know, retirement specialists, and they may have specific products that they're kind of pushing, but you guys are, like you said, more comprehensive, more holistic, and it's not all about products, it's about problem solving.
It is, John, and that's a good point. I'm glad you brought that up, because we work with many individuals in and around the community, and they may have money with their brother-in-law at the local brokerage firm around the corner. They may have money at the local bank. Even though we may not necessarily be working with them on all their assets, we still help them build comprehensive financial plans. And we have the ability to pull data feeds or electronic feeds from all those external accounts so that they can log into one simple resource and see everything that they have going on, whether it's with Brookstone Financial or at the local bank. So
something I want to talk about, because we've talked about it before, but I think it's interesting, this probability of success. For someone like myself, it makes it easy to understand, you know, where am I in the process? Am I looking good? You know, green light or red light, right?
Yeah, our probability success meter, there it is right there. That probability success meter really brings peace of mind to the bigger picture, because basically what this is doing, folks, is it's taking all of your account values, everything you've saved, pensions included, and it's tying them into one simple, easy to read indicator that tells us, are we on track to hit our goals in the future, or have we derailed and maybe we need to make adjustments? But John, this helps avoid emotional knee-jerk reactions, because if you're in the market's going to be volatile. That's just the nature of the stock market, okay? It's going to happen. But the question is, how much volatility can you see until you've derailed? And by using our system, our retirement roadmap system, to crunch all the numbers, at any point in time you can log on and find out what trajectory you're on to hit those goals.
You know, and what I love about Brookstone is if there is a certain portion of the stock market that is interesting to you, whether it be healthcare facilities like we've talked about before, whatever
Energy.
it is, you'll keep them updated. It's like, hey, if you're interested, we're going to have a little conference call, or if it's about energy or whatever the case may be, you're going, we think this may be of interest to you. It's up to them to make the decision, but you say you make sure they're aware, right?
Yeah, conference calls, client events. You know, one of the comments I hear all too often from individuals I meet with in and around the community are, you know, hey, I never hear from my broker. I never hear from my banker or my investment advisor. You know, I bought this annuity, I bought this mutual fund account, whatever it may be, and I never heard from them. You know, I just very seldom hear from them. At Brookstone Financial, client communications is key. We always follow up with our clients every quarter. It's an open invitation for a quarterly review, because some of our clients take advantage of it. Some of them say, you know, hey, Seth, nothing's really changed. Everything seems to be going well. I don't think I need to come in this quarter. That's fine. We just want them to know and want you to know that we're here for you. Okay, so that's very important. People need to know and understand what they're invested in and why they're invested in it.
Yeah, oh yeah, I want that conversation to continue. I don't want it to be over. So, all right, let's throw up that trivia question. We want to give away some prizes here, courtesy of Brookstone Financial.
Yeah, John, so the question was, which month averages more CD maturities than any other month? And the answer is B, it's April. And I mentioned we gave that away a little bit earlier. It's a $25 gift certificate to Sparrow's Tree in New Albany, Indiana.
And congratulations, Cheryl Dan. Way to go, Cheryl. You are a winner. $25 holistic baby products, right?
Holistic, all natural baby products.
All righty. All right. Once again, Brookstone Financial every Monday here on Wave 3 Listens. We'll be right back.